How will the next recession affect our housing market? I'm Lori Westheimer, and this is Dayton Real Estate TV, Episode 3. Recession, that is such an ugly word, and one that none of us wants to even hear, especially those of us who lived through the last one and know that that turned into foreclosures and a lot of short sales. Even if you were someone who benefited from that time, nobody wants to relive that period. Economic experts, though, are predicting that a new recession is impending, and it's likely to arrive anytime now, all the way up to possibly 2021. But most experts predict it's likely to be in late 2020 with our next presidential election. Anytime there's an election year, there's a lot of uncertainty of what's going to happen if there's a change, and that just causes retail to kind of falter and a lot of other fears that go into making financial decisions. The other big predictor as to when it's happening is just knowing that what goes up must come down, and we've been in a very long period of growth since 2008 when the last recession started. That said, a housing market collapse is not imminent with the next recession. As a matter of fact, 2008 was a bit of an anomaly in that housing markets declined at all. Over the last 100 years when they've been monitoring all of this, really only 2 recessions caused a decline in the housing market. Housing prices actually have historically risen during periods of economic decline. There's so much uncertainty in the stocks and bonds that, real estate's a safe bet. The 2008 recession did not cause the housing market to collapse. As a matter of fact, the housing market collapse is what caused the 2008 recession. In order to kind of get a perspective on the why that even happened, we need a little bit of history, back history about what was going on back then that would have caused such a decline. So back prior to 2008, there were mortgage lenders who were giving loans to unqualified, or as they call them, subprime buyers. These subprime buyers maybe had lower credit scores, or they didn't have verifiable income or a savings account even to bring up a down payment to the table. Lenders were pushing buyers into interest-only loans at over 100% of the value of the item being purchased. Now, what was probably not being explained very well, or maybe not even at all, was that at the end of a period, that interest-only payment would end and they would have to refinance or restructure the loan in order to have a larger payment to start paying down the debt. Well, either these people maybe didn't care because they just wanted to buy some stuff and move on with their lives, or whatever it was, they started to default on their loans. And when they did, that's what caused the major problem. So why was this even happening? Why were these loans even available to people? Well, back then, they were bundling loans into basically a bond offering that they were selling on the open market like investments, and the riskier the loan, the higher the yield. So there were people who were gambling essentially on how good of a return they're going to get on these risky investments. But what ended up happening was when those subprime buyers started to default, home prices started to drop because people were foreclosing. But that wasn't even the biggest problem, because that was just the beginning. The reality was these types of mortgages were being marketed very heavily, advertised even. You could turn on the radio and you would hear about the next way to refinance your high interest loan. And previously, loan interest rates were technically higher. People who had been even living in their homes for a long time may have had a higher 7, 8, 9% interest rate and were thinking, hey, this sounds like a great deal. I can refinance my house. We can pay for our daughter's wedding. We can put our son in college. Oh my gosh, we can go on a vacation or buy a boat, and we can just put it into our mortgage payment. Awesome, we have all this equity. We'll just go ahead and do it. Well, when things started to happen and the other buyers who were defaulting caused the home prices to drop, when it was time to refinance, they were unable to do so because their home wasn't worth the amount of money that they owed, because they not only owed the money for the home, but they needed to pay for the wedding and the college and the boat and that Hawaiian vacation last year. Another layer of people lost their homes because of this predatory lending practice. Not only did people lose their loans, though, many of them lost all their savings and their retirements trying to bail themselves out. In addition, some of them were even invested in some of these risky bonds that we were talking about previously. The entire mortgage industry, the housing industry, and even the banking industry completely fell apart during that period of time. And a lot of federal regulation had to come into play in order to prevent this from ever happening again. Since that time, the lending industry has been completely overhauled. And if you have bought a home in the last 10 years and you have applied for a mortgage, you know that that lender is going to be checking your credit score. They are going to be verifying your income with a W-2 or a 1099 or a tax return. And if they can't verify it, they are following up with you to figure out where that money came from. They are also making sure that you have the money to make a down payment, because they are not going to gamble on your ability to pay back. They want to know that you are able to pay that loan back. That, coupled with our current market, which is a very strong seller's market, simply because the supply is so low. There are so few homes on the market to meet the current buyer demand. We are completely in the opposite of what we were in 2008 as we approach this impending recession. Not only are lending practices extremely tight, but the housing is very scarce and people do need a place to live. So regardless of whether there's a dent because somebody gets the fear of a recession and maybe we shouldn't buy a house this year, the reality is that need to live somewhere is going to drive some demand towards the current housing market. And we predict as realtors that not only will your housing values be protected, but you're more likely to actually appreciate during that period of time. Now, if you're a buyer and you're thinking you're going to wait till the next recession to catch some really great deals, I'm afraid that that time has passed because of all the lessons that we learned from the past. And while it might not grow at the rate it's been growing, it will still continue to grow. So the best time is always now, when you're financially able to buy and not waiting for an economic downturn.